Hello and welcome to the Short Vol Show for a special live report. And we have a special guest who I didn't want to share up until now, but it is none other than Seth Golden, a famous trader who you may have heard of before. Welcome, Seth.
Hi,
How's everything?
David.
How's everything going?
Great. How you doing?
Not too bad. Just just enjoying this actual market sort of turnaround the last day or
Yeah.
two.
Yeah, it's pretty remarkable to have woken. What did we wake up to yesterday? Down almost 600 points in the pre-market on the Dow futures.
Yeah,
And
that was scary.
yeah, it was. And I wrote an article. I generally put out my articles by 7, 8 o'clock in the morning, and looking at futures and listening to the talking heads. you know it, it's anything to keep you from shooting yourself. But I mean, I guess it was around 11 o'clock that the equity market started to stabilize, and then you had the European markets close, and the US markets just started to trend higher throughout the rest of the day. And I think it was around 2 o'clock we went positive. I mean, it was just remarkable day.
Yeah, I saw a tweet from Peter Brandt, the famous trader, that was saying like this was a huge bear trap for people, and I think a lot of people who are like try to use the charts to trade this like recent sort of trend we've had,
Mhm.
probably laid into it a little bit once it started to rally, because if it was gonna keep doing it like it's done the last like 10 days, it would have gone back down again. So I'm sure it caught some people by surprise.
Yeah, absolutely. I mean, it caught me a little bit by surprise. I had done, probably 5 round trips that day. Um, and for each time, I traded mostly VXX yesterday, the exchange traded product. And each time that it bounced up a little bit, I would short it, and it, continued to give me a profit. But at one point, I also decided to put on a long against the box trade using UVXY, just kind of keep me within a 20% exposure parameter that I like to be in. Plus, my previous long against the box UVXY position had been in significant profit that morning, which I posted on Twitter, not on Twitter, but on StockTwits. So, I certainly didn't expect for the market to have a complete turnaround, but nothing short of awesome. And the rally that, it just keeps going today. But one of the things that I also did post on Twitter, on StockTwits, was to pay attention to the consumer discretionaries.
Hmm.
Because even though the markets were just really beat up before 11 o'clock, for some reason, retail was doing good, and so were consumer discretionaries. You had stocks like Fitbit and GoPro. Then you had the retailers like J.C. Penney, Target, Walmart, all trending higher. And if the broader market believes something is amiss and is going to stay negative, you wouldn't necessarily see consumer discretionary stocks performing the way that they were. So it was a canary in the coal mine, if you will, of a good canary in the coal mine. But it's something that I had posted on StockTwits, and sure enough, everything else caught fire, thereafter, and just followed. They had staples follow, you had energy follow. Just a really great day. And the good thing about a day like that, outside reversal days, you have to pay attention to. I mean, you really have to take them as predictory. If we go back to January when the market peaked, just before the day that the market peaked, there was the outside reversal day to the negative.
Hmm.
It was one of those things that I had spoken about in other interviews. I said, if the market, because it was just trending higher and higher through almost all of January. And on one of the interviews, somebody asked me, what would make you, what's a signal to you that the market might be topping? And I said, if we had a strong up day, let's say 200, 300 points in the down, and all of a sudden it just gave it all back, that's a signal, and sure enough, it was. So yesterday, when we had the opposite, of that move as an outside reversal day, I hope people paid attention because it usually has legs into the next day. From here, I don't know. I don't think anybody does, to tell you the truth. But you can at least get a couple of days, prediction out of an outside reversal of how the market's going to play the next day, possibly the one after that. But beyond this week, it's just really hard to tell what's going to happen. This market is so funky, is the best word. It's just so funky and volatile that you know you really shouldn't be predicting, if you ask me. You should be reacting. This year, I think, is very reactive. Most people are just playing it day by day, or they have a thesis in their head about the scope of the year. The investors are probably doing, they're probably no worse for wears this year, but traders are taking it on the chin, especially if they're emotionally driven. I think if you have a long-term thesis on the year in the market, you can do really well because your conviction is higher. Your conviction is much higher. I have a long-term thesis on the year, which is, the S&P 500 should be, 2,900 to 3,000, because corporate earnings growth is just super, super strong. And I've been very long-winded. David, I'm gonna you jump in here. We're
Oh
live.
no,
Sorry.
no, oh no! I'm enjoying listening to what you're saying. I saw your some of your posts about scalping VXX yesterday, and but yeah, I was just had the feeling yesterday that like so many days in a row we had that thing where like it would try to rally and then it would collapse. That it was almost too obvious that that would happen. Like that coming into yesterday after every other day had been exactly that. It was almost like, well, retail now is going to think that today is going to be exactly like every other day in the last week, and I thought that's why maybe things might change a little bit. But I've been, I've had the short vol position on that I've been taking on the chin on for like months, and so I've been looking for some relief on it, and
Right.
that was a little bit relief for me yesterday. I've been looking for, we've had what like 16 out of the last 18 down sessions, something like that.
Yeah, it's been really, really rough. I don't think the S&P, until yesterday, the S&P hadn't had consecutive positive days uh, for, I think, three weeks or so. So yeah, it's been a really rough. Well, February and March have been really rough for traders, and especially volatility traders like yourself and I. There's been lots of opportunity to do scalping and swing trades in the volatility complex, but at the same time, uh, you know, the products like UVXY and VXX are still elevated, year to date. Not they're not doubled in price, but they're up something like 60, 70, 75%. So I hold a core position, long term, and with VXX being out of the money, some 60% or so, um, it forces me to do a lot more trading than I would otherwise like to, and then especially I say otherwise like to because we haven't had a lot of contango this year. Backwardation and term structure has been persistent throughout the month of, well, late February, well, a good portion of February, and then most of March, which is not typical. And I try to look at some historical precedents for backwardation or periods of backwardation, and it somewhat mirrors what we saw in 2015, August through September. But when if you expand the historical contango picture of term structure, this is actually a bit more elongated than it was back then. So that's an extra layer of discomfort if you will. Um, but then again, futures markets are based on, the reliability or the, term structure, and term structure eventually has to subside and give way to contango over time. It's just a matter of when and how solvent you can remain.
Well, a lot of people have brought up this the point that we don't have that much data, like long term, on the term structure and on the VIX because, well, the VIX was only created. It's not like the VIX was created 300 years ago or something, and and a lot of what we have for data on like big spikes is like extrapolating. Like there wasn't a VIX in '87 crash or something like
Right.
that. And so a lot of people have kind of postulated that maybe the term structure will end up staying in a backwardation state or like a flattish type state that we've been in for extended periods of time. Do you think that that's possible?
It seems unlikely based on
Yeah.
how, the structure of future products.
Yeah.
That seems somewhat I don't, I don't want to say impossible, but it's rather inconceivable the way futures are priced. So either that, the futures curve has to, elevate substantially, um, to support that type of thesis and remain in that constant, state of persistent, upward pressure, which it doesn't work that way with agriculture. It doesn't work that way with crude. So I don't know that it can work that way with VIX products, because in general markets, function in a pretty myth, um, methodical way. A state, a homeostasis, if you will, and to suggest that backwardation would be more, if we reverse it, right? So we've had like 85% of the time we're in contango versus 15% of time we're in backwardation historically. If we were to reverse that, I mean, imagine what equity markets would look like. I don't know that you can have an equity market function that way. People would just flee. They'd go to other assets. They'd leave the equity market. They'd go to the bond market, real estate market, commercial real estate market, other asset classes. They just wouldn't play with equities anymore. So it seems a contradiction.
Yeah.
There seems to be an embedded contradiction suggesting that backwardation is here to stay and markets would be here to stay as well. Equity markets would be here to stay as well. That it just doesn't seem to work, hypothetically.
Yeah, it seems like the futures curve is always trying to get back into contango. Like left to itself, it's moving in the direction of contango. It's just that we've had some extreme
Right.
downside stuff to prevent it from doing so. I'm interested to get your take on Amazon. Like when you were listing earlier, like some of the stocks you were watching yesterday, discretionary. I all of a sudden have Amazon in focus on my screen for some. I think it's just because it's been in the news and it's interesting
Yeah.
to watch the moves. I was watching it yesterday as the market was moving around. What do you make of the president tweeting about Amazon and what do you think? I know you've always been a big supporter, not supporter, but very bullish on Amazon. Do you continue to be so now?
I'm bullish on the business model. I'm bullish on the company. I don't invest in it. I don't even trade it anymore. I don't think I've traded it in 2 years, maybe, because I can't get. It gets to a point where the valuation is so extreme, and there's just nothing to really compare it to.
Okay.
That if you don't understand it, stay away unless you can see something in the technicals. But I'm not a technical person. I don't really prefer technical analysis because I'm more of a fundamentals person. So basically, I don't understand the valuation at this point, and the technical analysis, is absent my expertise, so I avoid it. But so far as the business model, and because I do, trade and invest in the retail sector, as well as individual retail stocks, I do have to follow the fundamentals of Amazon. So yeah, I mean the business model is just it's tremendous. You can kind of metaphorically speaking, it's like a freight train. You know, eventually it will someday slam into a brick wall, but it's like a freight train that just keeps going, and anything that it decides to put in its path, because nobody really wants to step in front of Amazon, business model wise, and compete, to the extent that they're trying to survive in competition. But Amazon decides to, branch out into these different sectors and different segments of industry. There's just nothing stopping them. And the worst part about it for competitors, especially, if you're a publicly traded company, is nobody seems to care about the profitability of Amazon's business model. It's almost, well, sales are growing. That's all that matters. One day they can do whatever they want with earnings. That's not necessarily true, nor have I ever seen that be true, with a business model. Every business model has a total addressable market. Amazon, believe it or not, has a definitive total addressable market. We just don't know how big it is yet or how small it is. We just don't know. All we know is that to date, they've been able to grow sales 20, 30, 40%, I know it's been in the headlines a ton because of the tweets from, President Trump, somewhat lambasting the company and Jeff Bezos himself as an owner of Washington Post. There's a couple of issues. There's a couple of problems that Trump would, be faced with should he, decide to go full scale and hope that the individual state governments do some, reclassification or re-regulating of interstate taxation on third-party sales from Amazon's marketplace. And one of the biggest problems is Amazon is supported by a Supreme Court decision in favor of them. How in the world are you going to get over that? If you're the president and that's the route you're taking, how are you going to get over the Supreme Court decision that ruled in their favor several years ago? It's so bad. It's so bad. Walmart, who had it's not widely known, but Walmart sued Amazon. I want to say in 2004, but don't quote me on it. It may have been a little bit sooner. The U.S. government, because they were basically suing them over monopolistic practices. The government forced Walmart to reclassify the reason for the lawsuit, and it became something on pricing, for which it eventually got dismissed. Once the horse has left the barn with that business model and what Amazon was doing, it's almost impossible to close the door at this point and get the horse back in the barn. It's just, they're so big, they're so far reaching, and they're into so many industries at this point, so many jobs that they've created within the organization or that stem from the organization. I mean, if you, decide, it would be something on the scale of, one of the, a GM that needed to be bailed out. If you actually decided to cut them, off at the legs at this point, their business. So, and to put, the USPS, out there saying that Amazon is taking advantage of the U.S. postal system, and if you want to make a better deal for the U.S. postal system, whereby they raise the prices that Amazon is charged for delivery of their bulk goods, Amazon can go someplace else. I mean, it's not like the USPS has another customer or another account to, just fill that gap if Amazon was to leave. That's a big problem, and I think even the U.S. Postal Service said that, no, this is what we negotiated. This is This is right for us. This helps our sales. I don't know about profitability, and I don't think they spoke to that publicly. But in terms of sales, Amazon is a huge revenue stream for the U.S. postal system.
I mean,
Has to.
is it is it that Jeff Bezos is a liberal? Is that because usually Donald Trump is like pro business in most cases, and my
Right.
understanding of economics is that we're always reaching for maximum efficiency, and the reason that Amazon is able to take business away from people is because they have these economies of scales, and they've made a more efficient marketplace, which is quote unquote good, which is the same reason why I'm sort of anti-tariffs because it's kind of taking away from the efficiency of the marketplace, or it's making things more expensive, and it's going to get. I feel like if they raise postal for Amazon, it's just going to get passed on to the customer in the
Right.
end.
Right.
And so, but I think it can be seen as uh, a political. I mean, obviously, it's a political issue, and it could be seen as the president kind of like stirring up his base, trying to show people that he cares about the public and that sort of thing more than the specifics of the microeconomics of the company. In a way, I guess is
Right.
the way you got to see it.
Yeah. No, I agree. I mean, a lot of this is pandering to his base. A lot of it is some of the negative press delivered by the Washington Post over over his entire term as president. At this point, so he doesn't see that as justifiable. I get it. I wouldn't appreciate constant negative press from the
Oh, that's
media.
right. Jeff Bezos owns Washington Post. I
Right.
forgot about that. Yeah, that
Yeah.
that that makes sense too.
And I
Um,
think he was also, I'm not 100%, but I think, what was it last year where they started the business roundtable and,
he
had
didn't
all,
show up, right, or something.
yeah, something like that as well. Probably stuck in his craw a little bit, but, you know, I,
So so
I hope
is
it's negotiation,
so I
tactic.
I did so Amazon still doesn't make a profit. Is that right?
Amazon makes a profit, but most of its profit, I think, comes from AWS. They make a profit on marketplace when they want to. I mean, if they decide to cut back expenses here and there, they can make any quarter that they desire to. But their greatest interest is in growing
Yeah.
market share and sales. And at what expense, they don't necessarily have to care because the investor base is consistently rewarding them for consistently growing sales. My personal issue with Amazon is that um, the business is illegal. The way that they run the marketplace is completely illegal. The number of fines over the decade that Amazon has been, inflicted with by the Department of Weights and Measures, it's infinite. It's infinite. I mean, there's no pricing. You can take any product on Amazon's website, place it into a spreadsheet, follow it for the next 3 months to a year. It will never have an appropriated sale price, meaning it's on sale because the price is always fluctuating. That in and of itself defies all the regulations set forth by the Department of Weights and Measures.
Oh, really? I didn't realize that.
Absolutely.
So
That's what they forced Walmart to do, in that lawsuit way back when. But yeah, I mean, you can do your own personal study. Take 100 SKUs off of Amazon's website. Okay, take it in there and see how long it stays at one particular price, and when they do drop it to X, percentage discount, how long it stays there. And then when it goes back to the regular price, they never meet the requirements set forth by Department of Weights and Measures. Never. I've done this. I've done this for institutions. So when every other retailer out there is complaining, that Amazon doesn't have to play by the rules, it's true. They don't. Nothing's ever happened to them. They pay the fines, but it never gets escalated. Nothing ever gets escalated beyond paying the fines. It does get to a point where, I mean, you see all these companies going out of business, all these retailers go out of business, and you just see Amazon skating by, you know, uh, walking freely, knowing that, this is going on, and nobody does anything about it. Nobody's really doing anything about it.
I guess because, well, corporations have become so powerful as like individuals based on Supreme Court decisions. I'm talking about Citizens United for a second on in so many ways. And since they operate across so many different jurisdictions, it's kind of like who steps up against Amazon. And to have someone do that, you would have to have like some major political. It's like a political move at this point that you'd have to do, which is kind of what Donald Trump was hinting at, but I don't think he has the desire to follow through on something against Amazon specifically at this point.
I
Those
don't
are
think I don't think they get into those kind of weeds, and
yeah.
they should. Most people don't get into the weeds of understanding their pricing in the marketplace on their marketplace platform, and understand that it completely defies and goes against all the regulations in place.
It's so funny because so many times when I've talked to you about retail stuff, it always brings me back to when I was working managing a gas station because we had to deal with weights and measures there all the time, coming in, checking our prices and cigarettes, making sure that we were, first of all, displaying the same prices that we advertise,
Yeah. Yeah.
and
You have the
a whole bunch of
in
regulations that you have to follow.
Yeah, you have to have the in stock. If you don't have in stock, you've got to have a certain number of rain checks available and all kinds of stuff. They check for the bait and switch issues because against rain checks, it's cumbersome. But and then I wonder about OSHA. That I don't know when it comes to any fines levied, by OSHA, at their facilities,
Yeah.
shipping and their DCs and whatnot. But you got to imagine if they're skating by with weights and measures, that they're probably skating by with other regulatory issues as well. So those are my personal issues with the business. But other than that, if you can do it, which they have, the business model is fantastic.
I wanted to ask you. So I have this in my head that like um, I'm going back to the VIX for a second. That like at some point the game's going to be back on and quote unquote everything's going to be back to normal. Everything's going to go back into contango, and we're going to be able to sort of carry on somewhat like we were the last couple years as far as like the short vol trade is. Is my thinking that way an outdated way to think? Has the game totally changed, or could we potentially just kind of go back to what we were doing the last couple years?
Um, I think the game always changes year to year to year. I think
Yeah,
the
you say that a
volatility.
lot. Yeah.
Yeah, I think every year it changes because you get that much further extended with market valuations in a economic cycle. So the participation changes. This year was a perfect example of that, where people thought valuations were way too stretched. The multiple on the S&P 500 was approaching 18, if not above. And you just saw, even though the markets kept climbing in January, you saw just tremendous amount of volume in the SPX options, whereby all of these institutional investors and traders and portfolio managers, etc., were putting on protection, and that protection bleeds through into the VIX complex. So this year changes. But having said that, and to more directly answer your question, I do believe, just like in August in 2015, it took 6 months, almost 6 months, for, let's say, UVXY to return to its pre-August spike price. So when you're in this period of heightened volatility, it seems like forever, but the reality is that it's only been a couple of months. So it can persist, for the next 4 months, if not, longer, if we kind of add that variable of where we are versus this much further into the economic cycle. But yeah, I think more than likely um, you'll see more persistent contango in the back half of the year than we will see in this first half of the year, just because the back half of the year you're always looking at forward multiple as opposed to trailing multiples, and the markets adjust to that. That's why you tend to get these just nonstop rallies in the fourth quarter. Market goes up 1,000, 2,000 points, or S&P goes up 200, 300, 400 points. So I think fourth quarter, especially given the fundamental backdrop of of corporate earnings, we should have some pretty strong, contango, if not a much more subdued VIX, reading itself. I don't know if we'll see 9 and 10 this year. Maybe not. Don't need to be quite honest. You can have the VIX, stay at 15, average 15 for the next 3 months and build contango, into the term structure just from it staying there, because implied volatility will shift. I think we do get back into contango, relatively soon. How long we'll stay there, I'm not confident we'll stay. I think we'll waver in, between backwardation and contango over the next month or so, which will just, give way to a lot of trading opportunities, because we still have to contend with, the trade, tariff proclamations, and negotiations that will be ongoing until I think May, late May, before there's actual determinations on the negotiations and whether or not actual tariffs will be put into place. So you have that, which should keep a lid on markets, not let them get away from themselves again, or I don't think we'll see all-time highs before May. And the other issue that we have is, we'll be fighting the interest rate, rising rate issue all year long. That's going to be an endless battle, until that's not going to end. From here on out, to be honest with you, that's not going to end. So that's one that you can kind of stick in the feather of the cap of volatility bulls, if you will. But the volatility bulls have to contend with everything else, which is, the probability that a trade war will not happen, corporate earnings that are set to, come in on the S&P 500 around 17, 18%. Those are the current estimates for this year, for this quarter, and mid-teens for the full year. So those are just two huge feathers in the caps for volatility shorts or volatility bears, if you will. So
let's talk about just the next little period of time. We've got numbers tomorrow, which how significant are the numbers tomorrow? And do you think that the market kind of hangs in a holding pattern for the next week or two as we await earnings, or do we well, we don't know what's going to happen, obviously. It seems like the downside's been broken temporarily, at least, but we could go back to it. It's hard to tell.
Yeah.
How significant are the numbers tomorrow? Let's start with that.
The headline number on non-farm payrolls is not terribly significant. We're kind of in that, we're still in the Goldilocks mentality, where if the number comes in light, great. So then the economy's not at breakaway speed. It's not overheating, right? And if it comes in above, well, that's showing that corporate, the GDP should continue to be strong or strengthen, and employment is strengthening, which only helps the consumer that much more. So on the headline, I think it's a Goldilocks scenario. It just doesn't matter that much. What may matter a little bit more is the wage inflation data. It's supposed to come in a lot lighter than it has in the first 2 months of the year. But obviously, that is something that, well, a lot of people point to the wage inflation data from January, because that was delivered in the first week of February, February 5th. Everybody remembers that.
Yes.
Um, and it ran hot at like 2.5%. It's not supposed to be anywhere near that this time. But if it is higher than expected, significantly higher than expected, you could see markets, come back in a little bit from this 2-day rally. Again, remains to be seen. I'm of the opinion, if the market pulls back on it, I'll be looking for things to buy because I don't see inflation. I don't see it anywhere. I don't see it in the PCE data. The Fed has already said it's still not quite at 2%. It's trending at 1.7, 1.8% now, and their target is 2%. So it's still below trend. And even if it reaches 2%, that doesn't necessarily mean that the Fed will hike a fourth time. So in my opinion, it will take something pretty significant to heat up the economy to the point where the Fed hikes rates 4 times this year. Right now, they're only expected 3 times. We need some kind of additional catalyst to get the economy to a 3% or greater GDP. And right now, that catalyst doesn't exist. You need another infrastructure stimulus plan, which has been, talked about for a number of months now, but it doesn't seem to be in the budget. So I don't see that happening. I think we're okay so far as, inflation. And if the 10-year ticks over, 3%, we've had 3 months to kind of digest that probability, which is high. I think it will. I think it should at this stage of the economic cycle. It should be over 3%. But I think we've had 3 months now to digest that's an inevitability. So when it does happen, I don't think it'll have too much effect on the market either. So to your point, we may kind of flatten out, through April. I think we'll be higher at the end of April than when we started April. But on the whole of the year, I think we'll be kind of, still churning S&P 500 around 2685 to, I'm sorry, 2750, area.
So yeah, that was going to be my next question. Do you think that this sell-off quote unquote, sufficient to count as a sell-off, so that we can turn around and say, okay, it's green lights again for us to make new highs? Is this enough of a correction? I don't know if people sort of think of it that way, but I know that's the big question is, do we rally from here or not? But what's your opinion of that?
No, I think we chop. I
Yeah.
think we continue to chop, but I think the trend will be higher. I could be wrong, but I think the trend will be higher. But I think it'll be choppy goings. We may get 200 up day on the Dow, and then 150 point down day. Market moves like that. Because I don't think that there's a lot of over exuberance anymore in the market. So I think it'll be a lot harder to get a sustainable rally, where every trading day in the week is higher, or higher to any significant degree. Sure, we can, be up 50 points here, 30 points there. But I mean, the market finishes up 3, 4, 5% on a week. I don't see that happening anytime soon. I think there's enough headwinds and tailwinds that both sides of the trade are going to knock each other around a good deal over the next month. But ultimately, I think we'll be higher once we end the month of April and earnings come back. A big, issue with the last week or two is you have a lack of corporate buybacks. There's a standstill period where corporations don't do any buybacks ahead of, earning releases. So you've lost all of that volume and all of that backstop, if you will, in the market over the last couple of weeks, which has, made it, really tough sledding for the market to gain any traction.
Do you find it odd that the VIX doesn't seem to really pop that much when we get a down day? I mean, what would it take for the VIX to go to 30? It seems like nothing scares the VIX all that much. It gets to 25 and then it just kind of fades. Is that just due to like the events we've been having, or is that systematic? It seems
Yeah, it is a bit. Yeah, it's a bit psychological, and the psychology is systematic. It's expensive. It's expensive if you want to hedge with the VIX at this point. Compared to last year. If you want to hedge the VIX at 20, 21, 22, 23, that's more expensive than it was last year. Where you could have done it at 15, 14, 13, 12, 11, and so on. So it's more expensive than it was. So even though we have these really strong negative days, it's been really hard to get above and stay above 25 or 26. It almost immediately breaks down from there. And speaking of breaking down, the equity, if you look at the major averages right now, the Nasdaq turned negative, and we're barely up on the S&P 500, and
oh yeah.
I think we've given up like 100 points on the Dow. So this is kind of what we've been talking about is these days where the market can't really gain significant traction for any long period, whether it's to the downside or the upside. Hopefully we finish a little higher than we are now, because I'd hate to have an outside reversal day against an outside reversal day.
Yeah, I mean, for me as like a short vol guy, and I'm sure you probably concur, like if we chop sideways, I can still make money. It's just like the acceleration to the downside day after day, which is really frustrating my strategy. It's like the worst thing that can happen to me is that we just keep making new lows. If we're just chopping around, then I believe the term structure will align itself into contango. Like, for example, NASDAQ down 20 now. The VIX is still down, and with this kind of movement, the term structure will write itself into contango. It's just when we have these like, we're hitting that 200-day moving average, and we're breaking through it, and there's fear and all this stuff going on day after day is when it's like the worst thing for my position.
Yeah, I mean, it's tough. When markets can't gain traction one way or the other, it can definitely weigh on a trader's psychology, and it seems daunting. We've been stuck. VXX is my instrument of choice this year, and we've been stuck between basically 40 and 50.
40,
A
50,
little
yeah.
bit below, a little bit above, but trading in that channel for the last 2 months. And that's kind of consistent with backwardation and contango. We haven't stayed in backwardation without falling briefly into contango and then reverting again. It's just everything's been really range bound. And the S&P 500, same thing. It breaks down, loses the 200-day moving average, then recaptures it. And it's keeping everything kind of bottlenecked. And I think it goes to say, this consolidation period, that it's a consolidation period is what we have going on here. You don't have conviction to the downside in equities, and you don't have conviction to the upside. So you just get a lot of churning. But I think it's helpful because
it is. I agree. It's healthy in the end.
Yeah, it's healthy. It resets, the price to earnings multiple so far as the clock resets the clock, if you will. Because you can't really imagine just keep trending higher the whole year. At some point, investors consider valuation, and we're at that point. We're just at that point, and we may not break out of that point for another few months, if not when the second half of the year, comes into focus and people start having to consider forward P's as opposed to trailing P's. So, and of course, all of this assumes that corporate earnings come in as expected, at least
Right.
as
Right.
expected. So,
Yeah. Yeah. I mean, I've been recommending to people. I don't mean to make it sound like you can't make money.
yeah.
Uh, yeah. Sorry about that sorry about that interruption, folks. I actually did lose power there for a second, so we are back. Um, and yeah, sorry for that little glitch there. But yeah, so interesting market. Yeah, we have sold off a little bit today. I forgot the point I was making, so it must have been very important. Uh, anyhow, the that was a shocker.
You
Um,
okay?
yeah, so we have sold off a little bit today, and I guess we were just talking about what earnings need to do to come in okay, and for the market to continue, and that the market's been chopping sideways. And I'm fine with us chopping sideways. I'm just optimistic that we're out of this just grind down thing, because it would be nice if we're out of that, but time will
Yeah,
tell.
I agree. The only caveat, obviously, is the potential for something else geopolitically, to spark fears, the way that they have recently with the trade tariffs and things of that nature. We still have this looming investigation with Robert Mueller that at some point will come to a finality and a headline. Hopefully, it's nothing that affects the administration overtly, or the economy, or the markets. But it's something that I do think that it does weigh in the psychology of investors until it's out of the way. But and beyond that, our president does have he likes to be in the limelight. He likes to tweet. He likes to shake things up, and the market has had a difficult time dealing with that this year, because the things that he's talking more about lately are have a direct could or I should say they could have a direct impact on the economy. I don't know, favorably or unfavorably,
Well,
but they could.
certainly this
So
weekend we saw the his tweets seem to tank the market on Monday, right?
yeah, yeah,
A little
yeah,
bit. But it could be creating a buying opportunity. So maybe
yeah,
we should be thanking the president. I'm not trying to go one way or the other on this, because I know that there's different ways of interpreting it. And the other thing I wanted to say before I somehow killed the power was just that, not to say there aren't opportunities to make money in volatility. Like Seth's been successfully scalping, and the barriers to getting along a TVIX or a UVXY aren't there right now. There are not those decay, that heavy decay from contango. So there is an opportunity to things calm down a little bit, to grab a little TVIX maybe, or even VXX, and hang out for something to happen, the next tweet, and make a little money. It's been working for a ton of people. I
hmm
haven't taken that strategy, but I encourage people to check that out as a strategy possibly. But the one caveat is, do keep an eye on that term structure, because if it does go back into contango, then that drag does come back. But right now, you kind of have a free call on these things, because things calm down. You scoop a little bit of one of these vol products, and you really don't have that big drag that you have most of the rest of time, going
Yep.
against you.
Yeah, and the sentiment is somewhat more favorable, for long participation than it has been in previous years.
Yeah.
When you look at the volume on the VIX last month, it was very low as well. I mean, certainly, coming out of the Volpocalypse of February, that took a lot of participation out of the complex, but it'll come back. It'll come back. It always does. If not for the sake of shorting volatility, which most people understand, um, doesn't have the ability to stay elevated for persistently. It just can't stay elevated persistently, or I should say, not elevated, but persistently grind higher. Doesn't have that ability. It can stay elevated comparatively speaking, but it can't grind higher, with persistence. So you get these people, even on CNBC, who was demonizing the short volatility trade. Lo and behold, when volatility was around 25 recently, you had one of the Nigerian brothers, going short VXX, specifically VXX, when it was around $50, shorted it down to 42. It's just people understand the nature of volatility and how markets work. So the volume will come back. It's just a matter of when.
Is it
Um,
is this actually, are we building up goodwill for short vol traders with all the long people coming in the market? I mean, they say on stock twits, there's a constant battle long versus shorts, and people there would say like, oh, we've given a bunch of these long guys have gotten a couple small wins, and so now they're in for the long term, and we've lined up the other side of our trade moving forward for a while.
no, it's a great point actually. But here's another point I'd like to make. I've said this a while ago. Um, who not best to participate on the long side of the volatility trade than the short traders? Because they've been participating with contango, and they understand term structure and the constructs of the individual exchange traded products. So, and in general, they understand what moves volatility, and it's usually economic and corporate earnings speaking terms. So they have kind of a good handle on when it's possibly a better time. I liken it to the safe sex. There's no safe sex. There's safer sex. So there's no good time to go long volatility. There's just a better time to go long volatility. Sorry if that sounded too crude for the audience, but that's the way I think of it. I don't think it's ever good to go long volatility, but I think there are better times to do so. And I think that in 2018, you can do so in a strategic and thoughtful manner, being that you control your size, and you don't do too, if things start to go against you, don't get into the whole cost dollar average thing with long volatility. you know Take a loss, come back again, reevaluate what you did. And I'm only suggesting this in the state of the marketplace that we're in right now. And like I've said, I've done a lot of long against the box trading. When I say that, I mean I'm long volatility. I'm usually long UVXY against my significantly larger short VXX participation. I call those lob trays, LOB, and I post those to stock twits quite frequently. They're nothing of great significance. They're really just me taking advantage of understanding that we're in a very choppy market. We're in a market with elevated levels of volatility compared to last year. And if I can make a few bucks while I'm sitting on my short, volatility positions by using a long on UVXY, I'm going to do so. I mean, the longest so far that I've had to wait on a UVXY long against the box trade was 4 or 5 trading sessions, before it came back and gave me a profit. I'm okay with that, while I'm also scalping short positions, short trades on VXX. It's all in the means of, or it's all in the attempt to, stay with the short volatility trade and maintain, my liquidity during this choppy period. Because I know eventually the markets will follow corporate earnings, volatility will relax, to a more stable, less than 1% daily moves on the S&P 500. Because, people have to remember, volatility at 16 pretty much means you're going to get daily 1% moves on the S&P 500. And that is not a stable market.
Yeah,
That
realized volatility has been higher than the VIX even, which is
right.
not usually the case.
Exactly.
Yeah.
Exactly. So that has to change or the market will collapse. And, from that, you're just going to get people to get out of the market. It's not like the selling, it's not like we've had overwhelming selling pressure in the
Right.
latest downturn in the market. It's just we've had a lack of buying, volume. So, and that's largely because we're in a period where corporate buybacks aren't happening, as well as you don't have conviction. When you have a VIX above 16, it creates a lot of back and forth in the markets that keep buyers away until things stabilize.
Yeah, I mean, I have this theory that like there's always some money going to the market from people's 401ks and stuff, and so there has to be significant sellers coming out of somewhere for the market to go lower. But as far as the 1%, 2% moves, my theory on that is that big traders who are moving the markets get worn out after a while of all this. Oh, let's buy it. Oh, let's sell it. They get worn out from doing that too much, and they stop doing it. It's the
Yeah,
same. It's similar to your sort of theories about fear not staying elevated forever. You can't. It's hard to keep up being like, oh, buy the Nasdaq, sell the Nasdaq, sell the Nasdaq. But after a while, you just want to take a break, and markets calm down. I think.
yeah, absolutely. Well, one or two things eventually happen: either the market calms down or it collapses. Those are the only two outcomes. you know, um, they're extremes, but that's just generally how markets function. You can't have this persistent chop. It takes people away. People don't markets don't function when markets are not functioning properly. People avoid them. Doesn't matter which market it is, whether it's crude market, the currency markets, etc. If they're not functioning properly, and that's when you get these just massive collapses, like the financial crisis. You had credit spreads doing what they were doing, and people just got the heck out of Dodge.
Well, that's what
Markets
we
went.
thought. That's what we saw in 2000, 2001 in the options business was retail customers just were like, I don't want to do this anymore. I don't want to do this right now. And so there was no order flow, and whatever position you had, you're kind of stuck with. And but I don't see that it being like that now. The things are fundamentally different than they were back in 2000. But but still, the structure of the volatility climate has changed a bit because of that volpocalypse and because of the products deleveraging and coming back into
Yeah,
contango, we will be in a little bit different world, and we'll have to see if it's I guess quote unquote better or worse for us. But we'll find out sometime
yeah.
soon. So when is your? I'm gonna try to put you on the spot here. What's your closest guess to take out the all-time lows in VXX?
Somebody asked this on, I think, on my website, or they proposed on my website, phenomgroup.com, just a week ago or so. But I'm thinking after the midterm elections. So what's that?
Like six
What's
months
that?
or something?
Yeah, maybe a little bit sooner. Um, September,
I mean, that's
October.
remarkable, isn't it? It's almost a year without making a
Yeah.
new all-time
Well,
low.
yeah, I'm longer. This goes back to me kind of modeling the event from August 2015, where it took about 6 months. So I'm saying from peak to trough, where VXX hit its high in February to where I think the low will be. I'm giving it another 3 months, so I'm saying September, October ish.
See,
Um,
I'm a UVXY guy, and I know the bottom in UVXY was something around 8.5, and the
yeah,
top was like in the 30s. So
just before it had maybe another week to go before a reverse split was going to be announced. It had to stay in that range for another week,
right, it was
and
right there almost. Yeah.
yeah, it was right there where generally reverse splits, or it had in the previous two occasions, and then all of a sudden, and which gave rise to these conspiracy theories. Oh, they must have known. That's why they didn't announce a reverse split. No,
Right, right.
I'm sorry. They would have hedged a lot better if they knew. So, nah, not at all. So,
So yeah, check out Seth's website. I haven't really brought that up, but I like going on there and checking it out. And there's some great conversation on there. And it's not just volatility products, of course. It's all retail. There's a lot on
yeah,
retail stocks.
I actually just posted our on StockTwits and Twitter. I had initiated a trade alert to our subscribers on JC Penney. Again, I trade a lot of the retail stocks, and JC Penney is one that I follow. I don't invest in JC Penney. I don't think it's investable, but it's definitely tradable. And when it dipped below $3, based on their last report, I felt that it would eventually get back up to 335. So we took our position, and today it hit $3.35. Doesn't sound like a lot, right? 35. Well, we've got a 40-cent move, but that's almost 11%.
Yeah, percentage wise, it's huge. Yeah.
Yeah, in what amounted to 5 trading sessions. That's it. So
There's a lot of that going on. I mean, if the market starts to regain its footing, we're going to see a lot of stuff that scoop guys right now are out there scooping stuff as we speak.
yeah, the fundamentals there's so much noise. There's just a lot of white noise, a lot of rhetoric that initially spooks market, shakes out the weak hands, and scares people with who don't necessarily have the right resources around them, like yourself and other people. And but if you have that understanding of the economy, understanding of corporate expectations, even in a historical context, those corporate earnings expectations, that gets you higher at the end of the year. Tony Dwyer is somebody that I follow a lot. He's regularly on CNBC, strong analyst. He's got the highest target on the S&P 500 for the street analysts. But he's also the most focused when it comes to understanding that historically, there's only one correlation that should concern you as an investor: earnings. Markets follow earnings. They always do. They eventually catch up to each other. You can get through these periods where we're in right now, where, oh, well, the earnings are so strong, why aren't the markets going up? They will. You just have to think about it long term. So investors and traders with a long-term perspective and understanding, they should do well if they don't let this noise and this chop, discourage them from their participation in the right securities.
Well, we will leave it at that for this nice discussion with Seth Golden. And please do check out Phenom Group because it's a great spot, and also you can sign on there and just go on for $2.99 and be in the chat. And it's a great idea because you filter out all of the crazies from StockTwits. I mean, it's not paying $2.99. It's not about making $2.99. It's about kind of screening out some of the crazies, which we like to do, right?
Exactly. We have a much more refined dialogue in the chat forums, and you can talk to each other, with that $2.99 subscription. And, we have some really good traders who have been doing, the volatility trading for a while, as well as just general portfolio, management. And, there's not, that back and forth nonsense, where you're trying to one up the other person. It's general, it's genuine sharing, it's sharing of knowledge, insight, and perspectives. So that's why we did it for the $2.99. And sure, you can go on StockTwits for free, but like you said, you got to kind of weed through the crazies. And there's also the bias creep that you find on those free forums. People can come into my chat room and I'll tell them the truth, despite the fact that I have a short volatility position of significance. If I don't see it going my way this week, I don't see it going my way this week. And I'll tell you the reasons why, and if I think it is, I tell you, I'm not here to, bias the dialogue or the conversation. I'm here, give genuine insights on what I think will happen. It doesn't serve my purpose or anybody's, interest to, constantly have on rose-colored glasses, and so.
Yeah,
Uh,
totally, totally. And I want to thank you publicly for being my first Patreon guy. Following in
uh,
your footsteps, I got a whole bunch of people last week. So I don't know if it was your name that drew them or if it was the advertising. But thank you for believing
most
in me and doing that.
I love the videos that you put out, Dave, and I appreciate you bringing me on and delivering, good content to people on StockTwits, on Twitter, and on YouTube. Wherever and whenever I can support individuals like yourself or other traders, I'm more than happy to.
Well, thank you very much. Good luck on the rest of the day and the week. It'll be interesting to see what happens with numbers tomorrow. I'm looking for a rally, but we will see, I suppose.
Hope if we can finish strong today, it's hard to not have a similar market trend on Friday. Thursdays tend to mirror Fridays, so hopefully, let's keep our fingers crossed.
Nice. All right. Well, thanks, Seth, and
Thank you.
thanks everybody for watching, and we'll see you on the next one.